Okay, we're live. I know. You can't see me yet, but I'm going to do this. Watch this. Three, two, one. And now you see me. We're live. Thank you so much for tuning in. I'm Mitch Goldberg. This is your post market show. It's called Be the Boss of Your Money, where we cover the stock market, personal finance, and opinion, all so that you could be the boss of your money. You know, it's very easy for your money to become the boss of you. You've got to tame your money. You've got to be hard on your money. Don't feel bad. You've got to really kick the butt out of your money. Okay. So let's get into it today. Stock market, new record highs. We did this crazy 8 week round trip that started in about late August, early September. And here we are, let's say 7 weeks, and back to new highs. And this is what we've been talking about. I said starting last week, remember the bank earnings came out last Thursday, Friday, the market rallies 900 points. And I said last week, this is the most bullish ever. I cannot believe how bulled up investors are. There is a little turbulence I see after trading, after market trading, but it hasn't, I'm not expecting any major earthquakes out of it. So let's just roll the intro. We're going to get into a couple of things. I'm going to tell you the big stories of the day. I'm going to tell you what to expect, what I think we should expect anyway. And then I've got to get out of here because I have an event tonight at Ohika Castle, which is a incredible venue. I've got an in-person outing, and I cannot wait to see so many friends. I'm like literally jumping out of my skin. I actually have to shave this gruff and put on a suit and tie. Let's see if I could fit into a suit. All right, here we go. It's one of those things, just the intro sometimes gets a little bit delayed. Okay, anyway, I see some people out there. I see a whole bunch of you out there. Thank you so much. Listen, do me a favor while you're watching the show. I'm gonna be here providing you value because I love doing this. I love sharing value. I have almost 32 years of real life experience as a financial advisor. So I've seen all kinds of calamities, high interest rates, low interest rates. I've seen investors make all kinds of mistakes. I've seen investors overcome all kinds of challenges. I've overcome my own challenges and I've made my own mistakes, which I have learned from. I put all of that together to be better at my craft so that I can be better for you. And then what I do is I come out here every Monday through Thursday at 4:30 and I share all of this with you. My biggest problem is I just want to regurgitate it all, just regurgitate it all, you know, all at once. I just have so much in my mind that I just want to put it all out there. I've got to sometimes just slow my roll and calm down a little bit. Okay. So we've got a couple of really nice things going on in the market, and let's go to screen 4 and I will show you exactly where we are. Yeah, I love working the controls. I do. I actually enjoy this whole live stream process. We've got some really big news today, and I'm going to make my screen a little bigger before I put you on it so you can see it on your smartphone. All right, pop myself up here. First of all, let's just do the quick rundown. Dow is off 6 points. It's no big deal. Dragged down by IBM, which just absolutely tanked. I'll give you a quote on IBM in a second. NASDAQ was up 94, pretty good day, up over 0.5%. S&P in between. It usually you have, if the market's up, NASDAQ is up the most, then the S&P, then the Dow. Gold is off a little bit, losing its luster, no pun intended, from yesterday. If you believe in gold as an inflation hedge, it hasn't moved yet. But then again, if it hasn't moved yet and you believe inflation is coming, then is something about gold broken? My feeling is that gold has been an inflation hedge for thousands of years, a store of value for thousands of years. I think gold has proven itself, but crypto is getting the attention. So that's what I think is happening now. Will that last forever? No. Do I know exactly what day things change and people go back to gold as an inflation hedge? If I could tell you exactly when, I believe me, I would tell you. Okay. All right. So do me a favor though. When you're watching this, while you're watching this, give it a thumbs up or a heart reaction or a celebrate reaction or a laugh reaction, depending on what platform you're watching this on. Because I'm streaming right now to Facebook, to LinkedIn, and to YouTube. YouTube doesn't give you a reaction option, but the other two do, and most of my viewers are coming in from LinkedIn and Facebook. So give it a reaction, say hello, and I'll be able to see who's out there. Jay is out there. Hello, Jay. Thank you very much. And Colin. Hey, Colin, how are you, man? Sharing is caring. Thank you very much, buddy. It's a pleasure to have you here. How have you been, man? It's been a long time. I saw on LinkedIn you're not with Brown Brothers. You're with a new company. It evades me this second, but I hope you're doing very well, Colin. And thank you very much for joining me. I really appreciate that. I really do. So, oil off a little bit, no great shakes. It's been doing really well. Wow, the 10-year Treasury at 1.69%. We're just about 1.7% on the U.S. 10-year Treasury. It is just solidly higher, not going up rapidly, but it is definitely a durable move higher, in my opinion. The VIX, again, you see the VIX here closing at 15. Yeah, you're you're very welcome, Colin. Thank you, and you're welcome. So you see the VIX at 15, still under 20, so the market should continue to rally. Now, if you see the VIX pop up to like 18, 19, the market gets a little wobbly, breaks 20, market's going to give some of this nice gain back over the short term. Okay, the VIX is a short-term volatility indicator. It measures short-term derivatives up to about 30 days, and it gives you an idea that hedge fund managers, money managers are paying up for hedging their positions, so the VIX would go higher. It's a sign of nervousness, and when that happens, typically money managers reduce their stock holdings and they sell, driving the stock market down. But when they sell enough and the VIX goes up enough, that becomes a contrarian indicator, and then the market recovers. So on and so on, rinse and repeat. What else is going on here? Let's take a look at the small cap Russ 2K up 0.28%. So in line with the rest of the day. And I want to take a look at crypto. Okay. So yeah, crypto had a tough day actually. I don't get me wrong. I know what you're going to say. Oh, but crypto's up so much, Mitch. What are you picking on crypto? I'm not picking on crypto. I'm just saying it's been up huge since China said they're banning crypto. They're getting rid of, they don't want any mining, nothing to do with crypto except for China's own version of their renminbi, their yuan, their cryptocurrency, but it's their currency. So crypto's down about 6%, but it's up from the low 30,000 mark. So it's had a huge run. I think and we've talked about this the last couple of days, the Bitcoin strategy ETF from ProShares came out 2 days ago. What do you guys think of that? I'm not really, in the Bitcoin ETF, as Jay rightly points out. I'm going to see if I could comment. Agree. I'm actually seeing if I could comment back at you. Let me see if I could do this. Hold on a second, Jay. I've never done this during a live. It's not letting me put your name in, but I'm just going to go chat. Hey, look at that. It's odd. I said agree 100, and it came out from YouTube. You see the YouTube symbol right there, which is odd because I'm streaming through Google Chrome, through StreamYard. Oh, and there it goes. It's coming in from Facebook as well. Okay, so you've got my comment went up there twice, once from Facebook and once from YouTube. I don't see it hitting LinkedIn, but I'm streaming onto LinkedIn. Okay, anyway, I diverge. Just testing the technology. So let's get into this. So yeah, the crypto ETF, the Bitcoin strategy from ProShares, which it really should just be called the Bitcoin Futures ETF. It's not a tried and true ETF that tracks the spot price of Bitcoin. Now, Grayscale, which has the Bitcoin Trust that trades in Canada, um, that doesn't really track the Bitcoin so great either. Uh, but that one applied to launch a Bitcoin they applied to turn into a Bitcoin ETF that tracks a spot price, the real time price. Spot price means real time price of Bitcoin, and to trade in the on a United States exchange. Nasdaq um, or NYSE. We'll see. I actually hope it does come out. I think it would make trading a lot easier, and I think it would open up the opportunity to crypto to a lot more people. I know what you're thinking, like, oh, but you could buy it on Coinbase and PayPal and Robinhood and so many other places now. But being able to trade it directly into your brokerage account and making that a part of your overall portfolio as opposed to separating it in the mind of a lot of people, including myself, makes it easier. That's just my opinion, and it's a personal view, and that's what puts the personal into personal finance. So Bitcoin had a big run, and you know it looks like right now the launch of the Bitcoin futures ETF was the peak enthusiasm for Bitcoin. So let's go back to screen one, and I'm gonna just get you some quotes here, and let's take a look at IBM first. I'm gonna punch this up, and if it comes up quickly enough, okay, good. Let's get here. All right. So IBM was down over $13 a share. That's just that just is a horrible for a company like IBM. Just a horrible earnings reports, and it just could never get out of its own way. This has been going on, by the way, for for over a decade with IBM. Uh, and every time people get excited, they look for a value play in technology. They're like, "Oh, we've got to take a look at that." Let's take a look at Intel. Speaking of value plays that people are looking for, Intel came out with earnings after the close. Stock is down a resounding 7%. Disappointment over there. Also the semiconductor industry is pretty tough if you can't get enough or manufacture enough product. And let's take a look at the ProShares Bitcoin Strategy ETF, and it was down almost 6% in regular trading, and down a little bit more in aftermarket trading. So there you go. People got all bulled up. They bought this between 41 and 42, 43. The high on it, so look at that. The high is, you see that? I made the cursor green so it would be easier for everyone to see. Okay, but it was almost 44, and now it's 40, and now people are actually losing real money on it. And now you have to decide, do I really want to hold this? My contention is that if Bitcoin just stays flat, the actual Bitcoin itself, I think you lose money on this because it's made up of futures, and futures expire. They become worth less as they get closer and closer to their expiration date, and then they have to be sold. And new futures that expire in 30 days instead of one day have to be purchased, and that's called the roll, and that roll is pretty expensive. So even though the expense ratio is it's like, I think it's 0.98%. For a niche product, I don't think that's outrageous for an expense ratio. Uh, but the roll could add another 5 to 10% of expenses to this also. It's a really confusing kind of security. But what I want to show you is two big stories of the day. The shares of the Trump Link SPAC close up 350%. Yeah, it's okay. So this is more of a SPAC thing, but there's a SPAC, just a special purpose acquisition company called Digital World Acquisition Corp, DWAC for short. DWAC is the ticker symbol, and it's going to do I guess a reverse merger with a property of Trump to launch a new uh, social media platform. Um, it's very interesting, and there's a name for it. It evades me. I'll look it up in a second. But this was one of the most 10 most popular stocks on Reddit. This is clearly a meme stock now. This is DWAC is now DWAC is a meme stock, and people get excited. They jump on it because it's the next one. I don't think anybody did any buying for this for the fundamentals because it's a startup for a social company, and that's what it is. So I don't know if you could see this, but it went up 350% after news of a merger that would launch former President Donald Trump's planned social media platform, and that's going to be very interesting to watch. The other big story of the day is this, and this is pretty meaningful. Snap. Okay. Snap goes down 30%. This is a pretty popular social media technology stock, and it's done incredibly well over the last year and a half. Like a lot of things have done incredibly well, but this was like a single digit stock that went to what it go to over 70. But it is down now. I don't know if you could see it on your screen. It's down 22% right now. And what happened is they missing revenue expectations. Okay, after Apple's privacy changes disrupted its advertising. So Snap is just getting snapped. And let's take a look and see how this is affecting the other social media stocks. So Snap is down $18. It was $83. It's now 57. That is a pretty big hit. Well, listen, down $17 a share in one day, 22.8% in aftermarket is a pretty big hit. And as a result, Facebook is getting absolutely freaking smashed in aftermarket trading, down $20 a share, down 6%. Because you have to think that for the way social media companies work, they all do the same thing. And Twitter is down over 5%. Twitter had been already been going down, and Pinterest, which is down from 89, its high is down $2. It was up a good amount in the last few days on rumor that PayPal could be buying Pinterest. I have no idea if that's true or not. To me, it just sounds like a rumor. But the reason they're all down, and this is pretty significant. This, I think, will affect the stock market tomorrow on Friday. These companies make money by tracking you. They learn about you. They gather information about you. That's one of the reasons why people hate Facebook, because they learn so much about you that before you even know what you want, or like before you even know what disease you have, they already know. They're already serving you up content. All right. And this all has to do with privacy. Some people don't mind. Some people do. Look, I once was, in the market for a new car, and I was looking at a particular car, and all of a sudden the ad started popping up on Facebook. So it's really amazing how quickly these algorithms work. But if you're going through Apple is slowing down the sharing of that kind of information if using an Apple product, an iPhone. And that is hurting. That's going to hurt. It's already expected to hurt Facebook, but people weren't thinking it would be to any major extent. But after seeing the news from Snap, you're thinking, wow, this is pretty bad. Apple is basically going to choke these companies off from learning about you and gathering all this information about you. And that's how they make their money. That the value proposition, the value proposition to advertise on Facebook is that Facebook will help you serve up your ad to interested people. They know who would be more or less interested in your ad. They know when you're scrolling on Facebook, and that's when they're going to hit you. It's just so incredibly targeted. And if they take away that ability for Facebook to learn what you're up to, that's bad for the whole social media complex. We'll see how it shakes out. But when I see Facebook down aftermarket trading down $18 and change, and it was just starting to get off the mat from getting its ass kicked in front of Congress with all the controversy surrounding Instagram and teenagers. This is pretty disappointing, and it's a real slap in the face for people who just thought they were going to buy Facebook and ride it back up. We'll see how it goes. We might not see it so bad in the morning. What else do we have to look at today? Chipotle sales jumped 22%. Higher menu prices. Let me show you that. Higher menu prices offset rising costs. So there's been a big battle right now on Wall Street. Okay, and Chipotle is up 0.5%. I know what you're thinking. $12 sounds pretty good, but you might not have realized that Chipotle is almost a $2,000 share stock. Okay, but the big thing now is we're trying as investors to figure out which companies have pricing power and which companies don't have pricing power. And the companies that have pricing power, Dow Chemical came with numbers, pricing power, stock goes up. Procter and Gamble, for example, comes out with decent numbers, stock goes down because they said that, inflation is eating into their margins. They have to pay more for the plastic packaging. They have to pay more for their supplies, for everything. So some companies everybody's experiencing inflation. Some companies could raise prices and pass it on to consumers. Some companies can't. It's very difficult to figure out which ones. I would think a chemical company like Dow, for example, chemicals are petroleum-based products. So as oil keeps going up, that's got to hurt the margins of chemical companies. But then chemical companies can jack up their prices, and people who need the chemicals are still going to buy no matter what. So the question is, when do we get to demand destruction where people say, you know what, prices are so high, I'm just going to cut back on the amount of products I buy. So what you might have done is fill up your shopping cart at Target or Walmart, and now you're just going to maybe fill up your shopping cart halfway and buy fewer things. And now more companies are going to feel the pinch because unit sales are going to go down. And you just can't raise prices fast enough sometimes to counteract that. So we covered that. And I want to talk a little bit more about SPACs. This is I'm going to show you. This is the SPAC ETF, the Defiance Next Gen SPAC. I did a whole show on this and a little expose, and I basically panned it. I said, this is not something that's for most investors. It's really speculative SPACs. But SPACs, when they get hot, that's when a sector gets hot, like SPACs or let's say biotech or social media stocks, that's when you start to see the products coming out. The ETFs and mutual funds start to come out like crazy that focus on that particular niche, that particular sector. And this is 35 now down to 22. So anyone who's in this is hurting for certain. It's right at its year low. Unless you bought it within $1 ago, I mean, that's you're down in it, okay? Because it's right off its year low, and it's all-time low. It's down about 20% year to date, as you can see, down 19.8%. But with the DPAC, I'll call it the Trump SPAC, maybe that revitalizes SPACs a little bit, because the way SPACs are, it's like you're buying these shell companies that have money. They raise money from investors with the intention of merging with a private company sometime down the road. And you don't know which ones are going to hit. So what you need to do, or what you might want to do, is buy a basket of these. So at least you have one big winner in the basket. That's how these are supposed to work. They diversify your risk within that particular niche. Diversification is a strategy that we use to reduce risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. You like how I squeezed that disclaimer in, like, without even blinking an eye. I'm like, I could say that disclaimer in my sleep. I wonder if I could say it backwards. Nah, I can't. If I really tried, I'm sure I could say it backwards. I'd probably just write it down and read it the other way. Yeah. And what's driving Bitcoin? I think you should see this. Hold on, that's not the screen I want. That's the screen I want. JP Morgan came out with a report. What's driving the run in Bitcoin and whether it can continue? And their basic thing is, as Jay said, plus the euphoria fades. Because of the Bitcoin ETF. By the way, Collins says truth and no borrow on DWAC. It's the name, I believe, for Trump's social media platform. Yes. I'm not sure what the exact name is. It's Trump something. It doesn't matter. You'll find this stuff all over business news tonight. Okay. But the price of Bitcoin is surging. JP Morgan said the successful launch of the first Bitcoin, US Bitcoin futures exchange traded fund is not fueling the rally. We believe the perception. This is exactly what we spoke about the last couple of. We've been talking about this for months, actually. Exactly. The last time we spoke about it was yesterday. This just comes up, this topic. We believe the perception of Bitcoin as a better inflation hedge than gold is the main reason for the current upswing. Well, that's what we keep talking about is what's a better inflation hedge? Crypto. Let's be specific. Bitcoin or gold. It's for someone like me who's been around the block a couple of times. Man, I almost called myself an old timer. Yeah, screw you. You call me an old timer. All right, seriously. All right, Jay, Colin, you're still on my screen there. Hey, man, you're such a handsome mug. I should put your face over my face in the live stream. That would get maybe I'll get more viewers. But oh yeah, inflation. Is crypto a crypto? I think is more easily used. You could transfer it, you could send it, you could move it around. Gold, it's hard to lug around gold, and you can't just like wire gold or send it digitally electronically to someone in El Salvador. Well, if you haven't heard, El Salvador has made Bitcoin legal tender in that country. It's the first country to do so. So, but like if you're going to buy something or use crypto, you could send it over the blockchain, which is really over the internet. Okay, gold, you can't do that if you have physical gold. It's like cash money. It's not so easy to use. So I that's why I think it's got more use cases than gold. But gold does have the multi-millennia track record. We'll find out. I do think gold will regain its shine, pun fully intended. Clearly, Colin, you agree with me because you say clearly gold and crypto swings are wild. They really are wild. And they go from they get so investors get so caught up and so euphoric, and then they get so cold on crypto. But we'll see how it goes. I find this very interesting, and I consider myself fortunate to be in my career at this time where all of these things shake out, because I just think it's all just so fascinating, and it gives me something to talk about or write about. It gives me an idea for content like every day. For that I have to be grateful for. All right, so I'm going to let you go. We covered things like IBM and Intel, Chipotle, Facebook, Snap, Twitter, Deepak, the Bitcoin futures ETF, Bitcoin itself. We covered a lot today. I really appreciate you sticking around, and I'm going to go. I don't do the live stream on Fridays, so I'll be back Monday. But if you have any questions, you want to ask me something, hit me in the comments or send me a DM. I'll definitely see that, and I'd always love to hear from you. I'm going now to an event for my networking group, Long Island Elite. I can't wait. And keep an eye out on social media for some pictures. We're going to have a lot of fun tonight. Talk to you soon. Have a great weekend. Thank you.